Day weekend to you. I wanted to really start out with this. The only person who can change your future in the world itself is yourself. So basically, you are the only person that's going to create your future based on what your actions are doing today, yesterday, a week ago, a month ago. Those actions are going to catapult and create your future. So I want to go ahead and let you guys know tomorrow, Monday, Memorial Day, I have finally set up a training. I have it right here on my Twitter as well, also on the blog, the bare basics of trading. I mean, I have people that are messaging me daily that are really curious and really want to learn how to trade, but these people don't even necessarily know what volume is. They don't know what the bid and ask is. So I'm going to start off with that foundation of that base of a triangle so that you guys have the foundation down here in which you can specialize and find your own strategy. So it's going to be, right now I have it set up for 4 hours to go ahead and cover all of my slides that I've created. It could be a little bit longer or it could be a little bit shorter, but it's also going to be available on demand. So if you're not able to watch all of it tomorrow, all at once, or you want to come back to it and watch it again, you can definitely do that. So you can find it right on my Twitter page or on my blog. And also definitely check out, we've got the Modern Trader Summit right up there. It's June 22nd and prices will be going up on June 1st. We have traders that are going to be talking about crypto trading, trading commodities, especially oil. We also have candlestick trading. We have futures trading, risk management. We also have mindset training, so that if you want to try to go ahead and better your mindset for trading, which a lot of it is your own personal mindset with you and the market and how you react to what is going on. So definitely check it out, book your seat. They are selling really quickly and I definitely want to see you there. All right, guys, so let's go ahead and get into the week. I also wanted to mention Trade Ideas. One of my favorite scanning and alerting softwares is holding a sale for Memorial Day. Let's go down here. I posted it as well on Twitter. So it's right here. You can go right through the link, MD 2019, to go ahead and save 20% off of your first year or your first month. All right, that's everything on the agenda. So let's go ahead and get into the SPY. So let's look at it on the daily chart. You can see I have these that I drew because it looks like we could be potentially finding somewhat of a head and shoulders or triple top, which you can even see better on the weekly chart. So on the weekly chart, right, this is the 50 period moving average right here, the blue line, and the 200 is the simple moving average. Sorry, this light blue is the 200. So we basically broke down through that, bounced off the 200, tested the 50, broke up again, and it looks like we're coming back down to potentially test that 50 moving average, which is right here, 277.24. Should we break below that, and also this level right here, which looks like it's pretty much, we broke through this shoulder here, if you want to look at it like that, ahead, and then another shoulder coming down. So if we sort of draw a trend line right here like this, saying this is our head and shoulders area, right? It looks like we are heading down, okay? Let me go ahead and delete that. If we look at just looking based on technicals, no trade, war stuff, nothing about Trump. So if we look at our monthly chart, right? The high of this one where it closed is 281.90. So this is going to be a crucial level because if we go ahead and we break below that, that was last January. So beginning of the year, we're looking back 18 months, right? So if we go down below that, watch out. We could definitely be breaking below all of this. So we had our 4 EMA on the monthly at 283.22. These lines right here are based on the daily, the fuchsia and the purple. So we have it going below that, right? The next big level would probably be a high here, the close here of 282.48, which we did break on Friday. So it looks like we are somewhat in that downward motion, right? We go back and we look at the volume as well. Volume is very important, right? So we have this new high where we broke out, this was September of last year, excuse me. And then we broke out end of April and it started coming down. Now flip side, if you guys know anything about TVIX is going to be based on fear, right? So it's based off of the VIX. and it's twice the velocity of the VIX. It is a decaying instrument, not one good to hold. However, so we put this side by side, right, next to the SPY. I'll wait for that to process. So what I think is super, super interesting, right? We had the SPY on the weekly chart here, and we had higher volume, right? So we had the reversal that set up right here, and then we had massive, massive volume in October, right? So we had a little bit higher volume than normal, and then it started to really increase. And then as the downward trajectory happened, it slowed down a bit, but then at the bottom down here, we had a massive, massive volume, and then even more right there. Okay, so here we have big volume, right? This is the week of May 6th, right? Look at the week of May 6th over on the TVIX. Massive, massive volume as well. Now, when I back out the TVIX over here, this is October 8th, right? So you can see on the SPY, that's that massive volume. Look at the TVIX volume this time. It is twice as high, right? And this is a decaying instrument. So if we look at it on the VIX, which does not have volume, but you can see that if we go to that week right here, you can see that we are pretty much, we've closed, let's see, the close was at 16, and right now, TVIX is at 15.9. So we are hovering right here. If we go above and we start holding above 16, watch out. I believe that we are definitely in a bear market to come with more than just a correction based on, my opinion, this massive, massive volume that's right here on the TVIX. So looking at the SPY, basically, I would say if we are going to break down below 281.47 on the daily, I think we're going to be going down. We are mostly in a downward motion right now. On the Qs, let's go and look at the Qs, right? On the weekly chart, same thing, new high, pulling back. We broke the 21 EMA, looking to potentially test that 50 at 174.60. If we break that, we're going to be breaking this support probably right around here and continue on down. And interestingly enough, May 6th, again, high volume as well. Let's look at the Russell. The Russell as well has been, you know, it's hovering. We'll remove this. So we have this that's coming down. It touched the 120 moving average, stalled. However, we are looking more bearish. This looks like the beginning of back in October of last year. We look at that May 6th, we have higher volume, but we had bigger volume back here, and it did pull down. If we look at the Dow Jones, we can see, actually I want to go to DIA, the ETF. Again, higher volume here as well. So the volume is really going to tell you a lot of what is going on as well. And it looked like to me that it was a bit of an upside down head and shoulders here. However, we did not break above the 21 EMA. So it looks like we are on the further time frame out on the weekly. It looks like we are going to go down. We did test that 50 and bounce. Now, are we going to hold above this 50 next week? You know, or is it going to go ahead? We have the 4 that crossed over the 8 on the Dow Jones. On the Russell, we have the 4 that crossed over the 8. On NASDAQ, we have the 4 that's just now crossing over the 8. And on the SPY, the 4 has crossed over the 8 as well. So many times when you start to see that average cross, that's the beginning indicator of the change of the reversal and a further momentum in that direction. So we shall see. This is a big week coming up, and we could definitely, you know, move forward in a downward motion if everybody comes in. And one of the ones I want to talk about as well is Tesla. You see, Tesla had that action, right? That Tesla's on my short list for this week. As always, guys, you know, I did have my Series 7. However, it is no longer current, so please do your own due diligence. Tesla, I have on the short, it's the top of my short list at 189.42 and 191.45 with 118 million in the float. So when I pull it back to a 45-minute chart, let's go ahead and do the auto scaling here. So you can see really it tested up here this 120 moving average, and then it just broke down. It could not hold it, and it continues to break down. What's really interesting about this is, you know, Elon Musk has somewhat every single year he has raised funds except for 2018. He's raised bonds. Now those bonds are less than $1. Even, you know, it would be roughly $1.05% because they're 5% bonds. And so everything that he has raised, it's now below $1. So people are no longer having confidence in Tesla being able to pay forward these bonds. You know, the first level I would look for to the downside to be broken is 189.42, next level down 187.12, then 184.67, and then 182.81. And if we pull it out further on the daily chart, you know, that's breaking down everything right there. We would have to go back 5 years because you can see the low right here is 178.19. If we break that, watch out, we're going to 170, then on down to 158 probably in the next week or so. It is super extended away from the 4, which could create a bounce back effect or a retracement trade. However, this stock right now is receiving so much negative news, so many downgrades. You know, I think, in my opinion, that probably the banks that lent him money, which were Goldman Sachs, Morgan Stanley, and Bank of America, have probably hedged themselves and shorted or bought put options to go ahead and cover the losses that they're going to be taking. And now they're downgrading the stock, creating that self-fulfilling prophecy of it dropping down. They will request Musk to pay them back, which will either have to be out of his pocket or he will have margin calls and will likely be selling his stock, which you will be able to see on Form 4s. Let's see, we go Form 4 Tesla. This one is going to be a website to watch to see if we start to see filings coming in. You can see over the past 2 years, it's a net sale of 38 million. So that means that the insiders are selling more than buying. And many times you'll see the purchases are Elon Musk. He used to have the authority to tweet to prop a stock up. That's gone. Now he's leaking emails and propping it up. So right now, just like Solar City that he ran into the ground and then bought out with Tesla, which was basically he cleared all the debt, is it going to be a scenario where SpaceX is buying Tesla at a deep discount so that he can own it personally later on, but he still has all this debt that he has raised? So big mess there, big mess. Okay, let's get into the longs. As always, guys, do your own due diligence. Please trade with proper risk management. First one on my long list is OPRA. So I have a support of 1043 and a resistance of 1094. When we look at it on the yearly chart, you can see we do have this nice, it looks like cup and then handle breakout here. And if we can break this resistance back here, next level up is probably around 1143, 1150, and then on up here to 1202. And then if we can break the 12 level up to 1287, and then next test up to 1354. This one is really interesting. It has 109 million in the float. It was 57% short float volume on Friday. Next one on the potential long list is ARCI, a support of 531 and a resistance of 553. And this one had 59% short float volume on Friday. When we look back at on the year, you can see it has 4.06 million in the float. They did have a split here, so I like to look more back from the split. However, you can see it might have a run up potentially to 6, then up to 695, and then up to 8 because of this lower float. Right now, everything looks like it is curling up. We did bounce and we're holding above the averages. So also looking up for breakout of this spike up of 559. So break up above 559, then we're looking, like I said, up to the 6 area, the 7 area, 8 area, and then that 950 test. Anywhere above that, basically, we are going to be, look at all these splits in the past that have had it run up. So then we'll be looking at the 2030 if it were to be a real low float runner to continue, and then 2552. All right, next on the potential long list is AutoZone. Let's bring it back to our 15-minute chart. So AutoZone has been running up, had earnings. So first, second, third day it pulled back a little bit. Fourth day broke out above again. So support of 1046 and resistance really of 1056. Looking at it on the year, we are approaching this high up here. So the 52-week high is just about $20 above. on Friday, you can see it had a $20 range. So if we have another big major candle, we could easily break above and squeeze some shorts. It was 58.74% short float volume on Friday, and this is somewhat lower float with 24.6 million in the float. You know, guys, if all of these terms are really over your head, definitely sign up for the training on Monday. I will be explaining all of this sort of stuff so you get a better handle on it. Next one on the long list, I did include multiple lines here, guys, because this is one that I had on my watch list on Friday. So the watch list is super affordable. Look at that. If you had purchased into this, you know, my watch list is $39.99 a month, and this one ran $5. If you'd had 60 shares, you're looking at, you know, a nice $300 move right there, right? 60 shares times $5 is $300, right? So I was looking for this for another continued breakout. This is breaking out all-time highs, support of 95.29, resistance of 96.36, and let's see, this one does have 76 million in the float, and it was 56.7% short float volume on Friday. Next on the potential long list is CVCO with support of 154.67 and resistance of 161.81 or 87, and it has 8.4 million in the float. The reason why this one's so interesting to me is it looks like it has broken out from this downward trend. We do have massive volume behind it. It had greater earnings. Typically you will see 2 to 3 day runs. We could potentially run on up to test that 200-day simple moving average of 168.22 and then potentially pull back from there. Next level after the 161.87 test would probably be right here. Look at that, how that coincides. So the high of this prior run up is roughly the 200-day simple moving average. So definitely watch that area for potential long. It does have 8.54 million in the float and 48% short float volume on Friday. We already covered Tesla for the short list, so let's go into SPLK. On our 15-minute chart, I would say a resistance of 120.30 to be broken, and then to the downside, first level to be broken of 117.82, then down, second level to be tested at 116.13. Does have 146 million in the float, and you can see here on the yearly chart, it came down, it tested the 200-day moving average and bounced a little, so we'll see if we continue to test it again on Tuesday, Wednesday, Thursday. It did have earnings and negative sentiment by the market based on the earnings. Next as well for an earnings breakdown was for, Foot Locker. And I have Foot Locker again on the list with double lines right here. Why? Because I had it on Friday as one of my shorts. You know, this one had, I said, a resistance of 49.53 and a support to be broken of 47.50. Look, it went down $4.50 from that support to be broken. And it found a support roughly around 43.63 here, so that would be the one to be broken on Tuesday, and 44.68 for resistance to the upside. This is the 15-minute chart, so that is the 50 moving average on the 15-minute chart. Let's go to the daily so you can see it, and we are breaking down. Basically, it has gone below the 52-week low and set a new 52-week low. So it was negative earnings, new 52-week low. We'll likely have, you know, we've had almost a 20% drop. We'll likely have many institutional sellers happening on Tuesday when they come back to the market. So pulling it back on the 5-year after that level, I'd say we're probably looking at 40.89, then down to 40 area, and then if it continues on down from there, potentially 37.31. Next on the potential short list is BKE, had earnings on Friday, negative results by the market. I would look for support of 15.44 to be broken to the downside and 15.68 to the upside. I forgot to tell you Foot Locker has 111 million in it. BKE is a little lower float with 28.7 million, so this one might have a run up if some shorts start to get squeezed on it, which could happen, but typically we do see that 2 to 3 day continuation down based on earnings. So looking for it to break down. If it does break down below that and doesn't hold support, continue on down. If it breaks above, potentially a squeeze up to the 16.50 area right here to close the gap to the upside. Next on the potential long list is UVV, massive run up, Then we tested the 200-day moving average and we pulled back. So potential run down to the 50 simple moving average of 55.24. If we look at it on the 15-minute chart, you can see ran up on Thursday, Friday found a top, came back down, and then found support at 56.56, potential gap to the downside down here, down to 52.58 to be closed if it breaks down, or potential, run up if we can break above the upper level of resistance of 59.75. So a support of 56.56 and resistance of 57.63. It does have 24.4 million in the float. And for a potential longer term swing, I do have ZAG on my list, and we will look at it. And I didn't look at the float, so let's go to ZAG stock float. All right. So ZAG does have 26 million in the float right here, the public float. And you can see it had earnings, came down, found support, massive volume going on right here. So it did finally break above the averages. It's curling up right now. Let's move it up here. Let's look at it a little bit better. So you can see the 4 has not yet crossed up above the 8. However, it could be crossing up any day as long as we do hold above and we're able to break. It looks like it's using that 15 EMA as resistance of 7. So if it's able to hold above 7 right there, if we pull it back on the weekly, it looks like that 7, like it's the 4 EMA on the weekly. If we can go ahead and break above that, then it looks like it would definitely run up to 775 pretty quickly and then potentially test everything to the upside. And it could have a nice rebound. Look at that, it was up at 22 at one point. So if we could get it right on back up, all ZAG has the special coatings for all the electronics. I remember when I used to work in the Philadelphia airport, they had a special stand and they were selling things, and it's gone more mainstream now. So definitely checking that one out as potential long if it can hold above 7 this week. All right, guys, as always, make sure if you are clueless about the market, register for the training, the Bear Basics trading, right off of Twitter or my blog. And if you want to learn even more about cryptos, commodities, futures, candlesticks, everything else, sign up for the Modern Trader Summit. I would love to see you there, especially before the prices go up on June 1st. As always, guys, carpe profit, seize those profits one trade at a time. Have a great one.